Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of SoFi Technologies, ticker symbol SOFI. And so here I am recording this on Wednesday, September 18th, after the market has closed, and SoFi closed at a price of $8.11, being about flat on the day, but a little bit red. And so, I wanted to go over the chart because I noticed something a couple days ago and didn't really know how it was going to play out. And I think it's pretty clear that there is some bearish divergence in the chart. It doesn't necessarily mean price is going to turn around. This doesn't always play out. But, just looking at the chart here, I did erase a lot of the Fibonacci retracements I had up here, but I did want to leave a few things, so I'll go over those things here now. And so one of those things is this uptrend here, as well as this downtrend here. And so what we can see with that is bearish divergence. That is higher highs in the stock price and lower highs in the RSI. And so what I have found with this from doing these videos is whenever I point that out, if there are 2 points, it doesn't really seem to be that significant. We did see from this a pullback in the stock price, and that represents, a drawdown of less than 20%, about 19, almost 19%. And so, that is significant, but we did go to a higher high today in the stock price, hitting a high of $8.53. So, there is something there that, this was only 2 hits, not really that significant. But what have we done today? We hit another higher high. So what I can do is I can extend this trend line out over here. I'm not going to do it just because, it doesn't really matter that much. The thing that really does matter is, are we still seeing lower highs being formed in the RSI? And that really just comes from hovering the cursor over here so we can look at the numbers. And so the number over here, when we were hitting this high from that pivot point, the RSI on that day was, let's see, 65.51. That was on, let's see, August 29th. And then if we look forward, it looks pretty similar to the current RSI, but is it a little bit lower? So I can go over here to check that out. And so on the 16th, we had an RSI of 63.47, so still lower. And then yesterday on the 17th, we had 64.29, and then today 64.03. So while we are putting in higher highs in the stock price, we are continuing to put lower highs in the RSI. That is bearish divergence, and it is not just 2 points now, it is multiple points. So that does suggest to me that we could be seeing a reversal, and it might be more notable than this 18% drop that we saw over here. So I think that's good to be cautious of. Also, you might have noticed that I have this blue dash line here at 858. That was a gap that we hit, or that we created, following the trading day of March 4th. We closed at that price of $8.58 and then opened the following day, hitting a high on the 5th of March of $8.20, leaving that gap there. And so I think that, this gap is kind of like, in my view, a target. Maybe price will get up there. I think a lot of retail sees that and thinks price is going to get up to 858. It has to fill that gap. And then maybe once it fills that gap, then we would see some rejection. But I think gaps can kind of play tricks on us, thinking that they will be filled, but then we just get a tease. We get a little taste getting up to 853 and then getting rejected. And so I think that could be suggesting that we have put in a top. It does look like a double top here with this prior high. Also, we did put in this spinning top on the 17th, which could be suggesting a reversal or really, indecision. Price might be going up, it might be going down. But then today on the 18th, see a big wick up. Buyers not able to hold the price up there, get sellers trimming, maybe in fear of the FOMC that we had this afternoon, and then we get a sell-off. And so that is, while it's not at the exact lows of the day, that is a gravestone doji. which is bearish. It suggests a reversal, got this massive topping wick and closing, in the bottom quarter of trading for the day. So I do think we will be seeing a reversal. And one other thing, you might be able to see it. I do have a grayed out though. There is this downtrend that I'll bring back into picture. I'm just going to make that white so we can see it a little bit clearer. It is based on these 3 pivot points going back to the low from June 23rd of 2023, and then these 2 pivot highs over here. There's a little bit of a parallel channel there, kind of approximate, as we did trade around the middle of it over here, but we did wick up into that level but couldn't close above it. So with not being able to get to that gap, and even if we did, gaps do tend to be resistance when they're filled, because there were people who bought up here that are happy that they can finally sell at break even. And so that's probably what they were doing. If they did average down here, price doesn't need to get up to that exact level for them to be at break even. And, so we see that big wick there. I think price could be coming down some. And so, I had some Fibonacci retracements up here before, and I could do one from, this low here up to the high here. But since I do think that, we have kind of topped out in this series of bearish divergent tops, I am just going to do a retracement from the low here of 601 going up to the high. I thought I had all of the levels on here, but I'm going to have to add them in. And yeah, so I've got all of those there, just making sure the 0% that's actually a penny off. So I'm going to have to adjust that. And then the 100% is at 601. So I'm just going to adjust this to be right there. And then I will remove that 0 level because we don't need it. And so now we can see all of these levels to the downside that we might be coming back to. And so one level that does stand out is going to be the golden pocket here, as we did retrace to that, or effectively, found some support there after this pullback here, and that is right around $7 a share. I could see price coming back to that level. It could perhaps be finding support though at the 382, that's around 757, as we did get some consolidation just below that level over here, as well as this rising 3 methods pattern that I had previously talked about before we broke out to highs here. And so that could be also acting as support. So I could see a pullback to 757, possibly $7 a share. But I also do want to note that there were some gaps down here that have yet to be filled. This one is based on the close of August 7th, which is at a price of $632. So, price could be coming down to there. And if it does come down to there, we might also be seeing retests of 601 or right around $6 a share. So good to be cautious of that. But I'm not going to suggest that price is going to be coming down that low just yet, as I do feel like people don't really like my SoFi videos because I'm always thinking about this gap down here at 541. But the reality is that might be a stubborn gap that we may never get to, just like we didn't get to this one here on the most recent rise up. I don't necessarily think we're coming down to 541, but I do think it is good to be prepared for 757 as well as $7 a share, and maybe the 786 here around 650 with this consolidation there. That might be acting as support. So good to look for that, as I do think we have put in a top following these 3 tops that make bearish divergence with the lower highs in the RSI. So good to brace for that after this nice run that we've had. I think that the top is in. But those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.